You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means it is time once again for the Option Block. Everyone's favorite, or at least I hope one of your top 5 options, bi-weekly I should say, options sources. That should narrow the list down quite a bit. A little bit of education, a little bit of analysis, a little bit of what's trading, a little bit of unusual activity, a little bit of a peek into the OX platform, some strategery, some listener mail, and that's the cherry on top. That is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-exciting Options Insider Radio Network. Up to 13 programs, more on the horizon, more coming down the pike for you. We've carved up the options, nay, the derivatives pie, every which way but loose. But if you have an idea for a show we don't have yet, by all means, let us know. We'd love to hear from you. You can find all of the programming, including all 300-plus episodes of the Option Block over there at the mothership, theoptionsinsider.com, from whence all of our content flows. You can find all of the shows there. We have dedicated landing pages for each. Of course, you can do it the old-fashioned way. Surf on over to your audio provider of choice, iTunes, Stitcher, Aha Mobile, etc., and subscribe via those venues as well. Or if you're hardcore, take the RSS feed and just plug it into whatever podcatcher you desire, whatever software you like. We're not picky here. As long as you're listening, we don't care how you get to us. And of course, we've baked it all into our mobile app as well, available for iOS, Android, and the Fire OS. And the cool thing about using the app is that you can listen and also interact with the hosts of your various programs via Twitter, via Facebook, via email. No shortage of ways for you guys to get in touch with us and make your questions, your comments, your insights known to us here on the show, as well as to your fellow listeners out there. And joining me on the old all-star panel today, starting off with the man, the myth, indeed the legend, from St. Charles, Illinois, known for supporting all of his local oral surgeons. He is none other than Uncle Mike Tosaw from RCM Asset Management. Uncle Mike, welcome back.
Always happy to be here. Jealous of the Rock Lobster with all the fun snow he's getting out in Maine, but I'm sure we'll get plenty of it coming to the Chicago area soon.
Yeah, we just got our first dose on Halloween night of all things, so that doesn't bode well for a warm and tropical winter that I was hoping for. But you're kind of the other side of that spectrum, Uncle Mike. You like the big snow machines and the snow devices and snow booting in the whole 9 yards, so I'd imagine you're pretty happy about the potential for a very heavy, heavy winter.
I am quite the contrarian.
You should be up in like Alaska or something. That should speak to your tundra-like needs.
I couldn't talk my wife into moving up there.
This is about as far north as she would go, huh? I see. Yeah. I see. All right, and also joining us, also from the hinterlands, but not as far out as Maine or even St. Charles, good old Mark Sebastian, joining us from the suburban HQ of OptionPit.com. Mr. Sebastian, welcome back to the program, sir.
Indeed, I am at the suburban HQ. spent the weekend cutting down trees. So I'm at a little role reversal today, where I'm on the show and cutting down wood, and Andrew is unavailable. So it's total change for the normal Option Pit MO.
Yeah, next you'll be scraping barnacles.
I know, and catching lobsters and being a cyclops.
Doing all these other very, very manly things that are out of keeping with you. I don't see you chopping wood and digging ditches and all the other fun stuff.
You should have seen the thing so we sawed it down. Then I took an axe and dug out the stump, so I got a nice flat piece of land to grow grass on.
There you go. Everyone's dream. A flat piece of land to grow grass on. You sound like the
ironically, I chopped down a tree yesterday, too, and did the same thing, although it really wasn't that big of a tree. But nonetheless, great minds.
Nice.
There you go. A very, very manly crew we have here.
Well, my only regret is not having him here to cut down my tree, too.
All right, Alex, save us from all this manly outdoors talk. We are joined, last but not least, by the Viceroy himself, good old Alex Jacobson from Options Expressed by Charles Schwab. Alex, I'm assuming you didn't do any tree chopping on your weekend.
I cut no trees. I cut no grass. I relaxed over the weekend after what was a great week in the market, and came in today, saw a fairly quiet market, but saw blood in the commodities markets, looking at crude and gold, and but a lot to talk about today.
All right, like the man said, a lot to talk about, so let's get to it and dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is indeed the portion of the show where we break down what's going on, what was catching our eye, what was lighting up our collective tapes today. And as Alex alluded to, it was a bit of a mixed day on the street. S&P's pretty much unched on the day, the Dow closing off fractionally on the day, but not a heck of a lot, about 25, 26 handles. The Q's up fractionally, up about 1/3 of a point, so not much going on there. And the VIX cash up about 3/4 of a point to about 14.78. So that's what we saw in the broad equity and index land. But of course, there was a lot of other stuff going on as well in commodities and other products. So a lot of places to analyze, a lot of places to sink our teeth in. Maybe, Alex, we'll start with you. What in particular really caught your eye over there at OX today?
Well, when I surveyed the desk, the bloodbath in crude continued today. Crude lost almost another 3% today. Gold got hammered today. But the big story on the desk was the Alibaba earnings coming tomorrow. Alibaba taking out part today. Earnings are before the opening, and there was a lot of positioning. Grigas said it was kind of to both sides of the market. There were people buying premium, there were people selling premium, so it seemed like there was no clear consensus. The consensus earnings number and the whisper numbers are fairly far apart, which is what probably was driving a lot of the buy premium traffic. Another issue that kind of caught attention today, didn't get a lot of option volume, but got a little bit of equity volume, is the CBO took out 60 today. And I think that's really telling about how people are using options in managing risk, because I think it's the only exchange that's trading anywhere near a high. So that's kind of a vindication of everything we talk about. But interesting to see the CBO take out 60 today.
Yeah, CBO rallying hard. It doesn't seem like that long ago everyone was talking about overwriting the hell out of it when it got to 30, and now here we are, double that in not too long of a time frame. So this goes to show you, if you're in the volatility of the broad index game, those are two good areas to be in right now. You touched on a lot of things there, Alex. There's a lot of things that are going on. We, of course, hit on a lot. If you listen to our Volatility View show listeners, we've been talking a lot about what's been going on in crude of late, particularly from a volatility perspective. And you guys, you can't see it right now, but I'm looking at it on my screen. If I showed you this skew chart, I've brought up a skew chart here for the American crude across pretty much the entire term structure. If I just put this up here without the legend and I just pasted it into Skype, Alex and Mike and Mark, you would think looking at it, you would just think you were looking at a typical equity investment skew type graph, because that's exactly what it looks like, if not even steeper than a traditional investment skew graph. So we've been talking about that for a while, the steepening of the skew out in crude, and it is ever steeper even this week. No surprise, crude taking on the chin a bit again, and you get down to the 70 handle. Those puts are trading at a severe premium. This is not like the traditional crude skew at all. So this shows that there is a lot of concern, a lot of interest, a lot of premium to the downside right now out here in good old crude. You mentioned Baba as well, Alex, another interesting story, of course. They're pretty much taking out Wal-Mart at this point from a market cap perspective. And they do have earnings tomorrow. I was going to mention it in Around the Block. We can touch on it now, though. They do have earnings tomorrow before the bell. So hopefully you got your positioning on now. I wish they were coming out now. It'd be great to talk about them live as the first real earnings announcement has come out. We can kind of parse it a little bit. But things are looking pretty interesting out there. That straddle went out at about, let's see here, the weekly straddle at about $7, which is about roughly 7% since it's a $100 stock right now. So interesting to see what we get out of this first announcement coming out of Baba. In addition to all that stuff, Uncle Mike, what caught your eye in today's activity?
A bunch of things, actually. Just kind of going down the list in alphabetical order on the fruit company. News today is that they're saying that the iWatch might be out a little bit later. Apple obviously didn't care. It went up another $1 on the day today. Also, in terms of just to expand on oil a little bit, it was slipping today. Ha ha, pun intended. Had to get my bad joke in for the day. And in looking at just the Dow 30 as just an example, the two stocks that were really holding the Dow down, so to speak, are Exxon as well as Chevron, which would make sense with oil slipping as it has. Silver itself was not down too much on the day. I believe, let me bring up my other list here. I believe SLV was down 2 pennies on the day, so it wasn't too much of a downturn. Then GLD was down around 50 cents on the day, which it's obviously a down day, but nothing too significant. And other than that, in the stock market itself with the S&P, we did go and get some new highs on the day today, but it came right back. It didn't come right back down, but we did come back down. A lot of the movement actually came right when oil first was going below 80. So I think for now, at least the story of today, oil definitely played a big part in what was happening with the marketplaces. And this is going to be an interesting week. And the fact that we have elections, the fact that we have non-farm coming out on Friday, we got a lot going on. It's going to be a good around the block today.
Yes, I should say so. And just for the listeners at home who are curious, so by the way, we are recording this, listeners, on Monday, November 4th. For all of you playing the home game, get mad at me if I don't mention the date. Uncle Mike, we are past that historic 2,000, very sticky 2,000 level in the S&P, so I'm sure a lot of our listeners are curious. What are you rocking out there? Just long SPY, long put, or you got something else funky at work?
For the most part, pretty flat still. I want to see it above the number that I had said was 202 on SPY. And I wanted to see it close above 202. So today I reserved some time in my busy schedule to do something that I pretty much do all the time anyway. So I guess I didn't really reserve much time, sitting by the screen. And I was ready to get long again. But for the most part, I'm going to remain flat until we can close above the 202 level. That's one where I think 201.93 or something like that. And I think I just said 202 to make it an easy mark for myself. But for the most part, I have some positions on, but I would say I'm predominantly flat right now in the S&P, and I want to wait till we actually make those new all-time highs. If I miss a little bit, if we gap up to 203 tomorrow, I'm fine with that. But for the time being, I'd like to see us make the new all-time highs, and I'll probably miss a little bit. I'm okay with that, but I'd rather be safe.
Preaching patience. How out of character for you, sir?
You realize how much it drives me insane right now to not be as long as I like to be?
It must be very
It's insanity
painful
for me. I'm going to have to go to get therapy or something.
Very, very painful indeed. Let's shift away then to give you some time to nurse your wounds. Move on over to the Greasy Meatball himself. Uncle, I almost called you Uncle one more time. Mr. Greasy Meatball, what caught your eye in today's activity? What was your pit chat on fire about today? What was the action over there in Pitland?
Yeah, well, the action in oil was really interesting because it happened right at the end of the day, and it turned out it had to do with the Saudis lowering their price of oil that they're selling to the U.S. So that was really what drove WTI getting absolutely smoked at the end of the day. That was kind of fascinating, and it kind of pulled the whole market lower. The market was nicely higher than that. The Saudis came in and sold and dragged the whole market with it. Alibaba, one of the things we were playing around with was that we thought there was a little bit of play between Yahoo and Alibaba, Yahoo and Alibaba in terms of how one could play off the other. And so we were kind of playing with kind of doing some volatility arbitrage between Yahoo and Alibaba. And most notably in the case of kind of a breakout lower, our assumption was, here's kind of the way I see things with Yahoo and Alibaba. I don't think Yahoo's going to catch most of Alibaba's upside, but I think it's going to catch a huge portion of the downside. So it's kind of a lose-lose for Yahoo, for the Yahoo investor. If I own Yahoo and Alibaba goes down, I'm going to catch a lot of that. If I own Yahoo and Alibaba rallies, I'm not going to get as much of it as I should. So, for that reason, we were kind of looking at kind of put spreads in Alibaba versus puts in Yahoo. So kind of an interesting trade we were playing with.
Did you end up putting it on, or just we
put it on in the strategy letter. We did. Okay. So that will be an interesting thing to watch. Just real small, more just kind of for interest. Nothing that's going to really move the needle, but certainly so that people could keep an eye, see how that thing would move. And then on a personal level, I did not. So as many of you know, the strategy letter is a theoretical portfolio. It is not a actively live traded portfolio, although my understanding is Andrew does almost all those trades for himself.
It's like, you're like Kramer. It's all in your charitable trust.
It's not, the trust isn't even charitable. All right. If there was a fictitious charity,
yes,
it would be a fictitious charitable trust.
It is called the Greasy Meatball Support Society.
Exactly.
Support Greasy Meatball Jr.
Indeed.
He needs to go to private school. But yeah, this is an interesting one. It is kind of hard to really dive in with both feet on Baba because this is literally the first earnings event we're seeing out of them. So we really have no idea, no historical record how they've performed versus past earnings, how their straddles performed overpriced, underpriced. I mentioned about 7%. I think given everything we've seen in this underlying, that doesn't seem extraordinarily rich by any means. But then again, it seems like for the most part, premium sellers have been the winner so far this cycle. So if that continues to be the trend, then who knows? Baba could perhaps dramatically underperform. So there's a lot to be seen, a lot to be gleaned, certainly by perhaps watching a few of these sessions to get a feel for how Baba's going to perform before diving in with both feet. Alex, you mentioned Baba being hot. Was there a particular strategy that OX clients were really diving into en masse out there in Baba? Was it a lot of premium harvesting? Was it iron condors on that front week trying to capture that 7%? Was there any particular one trade that was really lighting it up in Baba over there today?
So here's what's going on, and the answer is yes and no. The consensus number in Baba is like 40 cents, but the whisper numbers are like 28 to 60. And to your point, Mark, because this is their first reporting period, there's, I don't want to say a lack of transparency, but a heightened speculation about the expected number versus the whisper numbers. So what we're seeing here today was some straddle selling, but yet some strangle buying. And obviously those were maybe the same constituencies, and maybe there were two different constituencies. I won't have sort of more granular look until well after the close of business. But when I queried John, when I went to Grigas to ask him what was going on today, he said, in the morning it was premium selling, and then as it continued to rally into the end of the day, there was some buying. And it sold off a little bit near the end, and he said we saw premium selling again. So, it kind of looked like the election, a little too close to call here, but there was a lot of volume. A lot of people are playing the number, but there wasn't any clear consensus. It wasn't to one side of the market.
I'm going to go out on a limb and hope that those strangle buyers were related to the straddle sellers. I hope they're legging into some iron flies and whatnot. Because I could see being attracted by that premium level there in the front month. But if you're just blasting it out, then you have learned nothing from this show and the 4+ years we've been doing it now. So hopefully you've at least got some risk mitigation on there somewhere. You're picking up a strangle somewhere so that if the worst does come to pass, because we literally know nothing about what Baba is going to do. So it's all a complete mystery. If you're just blasting out the straddle and hoping for the best, hopefully at least you got something cooking in your back pocket to protect against this thing going to 50 or up to 200 or whatever the case may be. We've seen crazier things. Witness Netflix from a few years back to if you need some good examples of that. Meanwhile, it's time for us to keep on rolling right on into the weirder portion of the show. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show where we break down some of the weird, wild, woolly, bizarre, head-scratching, sometimes just what the hell are they doing type paper that we see out here in the old options market as profiled by us over there on the mothership, theoptionsinsider.com. Going to kick things off with a trade that came across our tape this morning. Looked kind of interesting. It's kind of emblematic of a trend we've been outlining a lot here of late, is people looking a little bit farther afield to try to harvest and capture some decent premium, particularly from a covered call perspective. And when they do it, they go after it hard. They go after it for size. And we saw that again today in CBS Corporation, ticker symbol, of course, CBS, closing today about 54.5 or so, a little bit shy of that. Pretty much up about 0.5% or so on the day today. This is the name, as you might expect, given its well-known brand status. Does some fairly decent volume, about 17,000 contracts a day, doing a whopping almost 70,000 today, and pretty much 60 of that nearly 70,000 contracts came in one just massive, mega, supersized overwrite here of the Dees double calls. When we started, actually, it pretty much was all one chunk, which is also just bizarre in and of itself. We profiled this morning on the site here 59,298 of the Dees doubles. That's the Dees 55s for those of you who didn't grow up in the SIBO pits. Going up for 210 this morning, paper selling for size. They went up initially 205. They got adjusted up to 210. So this guy clearly wanted an adjustment on his 60,000 lot. I can't say I blame him. A nickel 60,000 times goes a long way. Going up for just tons of size. There is some substantial open interest on this strike, but still only about 18,000, nowhere near the 60,000 that were going up today. If all holds true, this works out to about a 3.5% or so return through December. So not bad. You can see how this guy liking this number, liking this level, and just saying, I'm going to just write the hell out of this strike to the tune of nearly 60,000. This is definitely one of the larger overwrites we've seen going up recently. We've seen some better return profiles. I think we profiled one recently going up about 10,000 times. I forgot the underlying. That was for about 7% or 7.5% even through January. So that was a little bit better, obviously, but still, this is nothing to sneeze at. And this guy certainly liking this level, doing it up 60,000 times. A little bit small for you, Mr. Greasy Meatball, but still interesting nonetheless. What's your take on our friend here just backing up the truck into the Dees double calls here in CBS?
You know, CBS, to me, that looked a lot like the guy was long stock and was doing some call selling to kind of produce some income, et cetera. So it looked a lot like a kind of a quasi covered call trade more than anything.
Yeah, it certainly seemed like a guy just going for some yield, like we said. Yeah, and we've seen this before for size.
I did the math and annualized that yield trade, including the dividend, and if the underlying rally worked out to about 30% annualized. So it totally was a yield trade.
And not bad for a 30% for a year, particularly
in CBS. That's more than fine.
Particularly when you take the dividend, yeah.
Yeah, I think Desi Arnaz and Lucille Ball would be happy with that return.
Wow, that's well beyond your usual 80s frame of reference. You're getting into the 50s and perhaps even the 60s at that level. That's Alex's.
Yeah, no, but
that's an Alex reference.
You know what the noise the trader's going to make if if CBS drops or if CBS goes up $20? You know what he's going to say?
Are you going to say Babalu? Oh, jeez. Wow, we're dating ourselves. Even Alex, I think, is looking askance at that one. Like, wow. That one is predates me even is what Alex is saying.
That more than twice predates you and I. I think if you subtracted your age from when you were born, maybe I Love Lucy was on. Probably not.
It might work. I'll have to do the math on that to check, but we'll see. Good old Desi.
Meanwhile, Alex remembers radio. He was listening to the Shadow, things like that.
All right, before we offend some of our older listeners, let's keep on rolling right on into our next name. Kind of the flip side of that script. You just talk about a size overwrite. Now we got a fairly decent, at least comparatively decent size trade. Certainly not as big as what we were just talking about, but for this name, fairly sizable. This is Gerdau SA. This is an ADR, listeners, clearly. Ticker symbol GGB. Closing today, essentially unched down by around 4.5 or so on the day, $4.50, of course. This is a name that does usually about 800 to 900 contracts a day. Doing a little bit more than that, doing about 5,000 today. So a decent day here from a volume perspective for good old GGB. And what went up? Well, we have to roll all the way out to the June 2015 expiration cycle to find that activity. And what caught our eye out here today, as listeners, was essentially just one big block. Again, that's kind of the moral of the story today, mega blocks. One big block of 5,000 of the June 2015. Like I said, 4 puts going up for about 27 cents, 5,000 times on open interest, just 11 contracts. So clearly all open in paper. It looks like your standard puts in stock because it also went up with the stock right around 4.5 or so a little bit higher than where it closed at 444. Looks like your standard tied put trade, which is not surprising for this name given the fact that it is indeed so cheap. And of course, puts in stock, you're looking at some upside, synthetic call listeners. So this guy clearly liking some upside chances here in GGB and putting about 5,000 contracts where his mouth is on this one. I almost called you Mr. Rock Lobster. That would not be the case. Mr. Greasy Meatball, what's your take on our friend here? Putting some size put action on here in GGB.
I'm not a super big follower of GGB.
Every day. That's all I check.
But, a $4 ADR. And I think this is one we've seen in the past. And my understanding is the chart has not been pretty on this one. And I believe I'm correct in saying that. Let me double check myself here. But this was one that was doing a lot better a little while ago and has gotten uglier and uglier.
It was trading $8 at the beginning of the year and kind of hasn't really looked back.
It's been a rough one. So my guess is this is a more of the same to come. So just think about that.
Seems to be a little pattern here of every earnings, a nice little blip, then right back down, and then down some more, and then a little bit of a rally towards the earnings, then right back down again. So they keep disappointing people over and over again, and yet they keep coming back for more. This guy clearly liking the upside of it, but wanting to also put on some protection in case the worst does indeed come to pass. So we go from covered calls to puts in stock to a different side of the script yet again today. We're going to wrap things up with a name we've talked about once or twice in the past. This is Autodesk, ticker symbol ADSK, closing today about 57 3/4 or so, up about a quarter or so on the day, or nearly 0.5%. This is the name that does about 7,000 or so contracts a day, doing about a substantial amount more than that today, looks like about 28,000 or so, just a hair shy of 28,000 on the day. And what caught our eye out there? Well, it's pretty much one sizable block yet again. This is pretty much all three of the ones we profiled today. One mega block. This time it was a block of 20,000. So right in between the other two, 60,000, 5,000. Now we got a 20,000 lot block to finish us up here. Going up on the Jan 2015, 70 calls, paper buy-in for 45 cents. Like I said, 20,000 times, only 1,500 contracts, open interest. So this is clearly an opening trade. Like I said, went up in one mega block. The it looked like there were some shares, about 240, nearly a 250,000 shares went up as well. So it looks like this guy put this one on delta neutral, buying calls, obviously selling stock to hedge in that sense. So this guy clearly looking for a nice pop from a vol perspective between now and the end of January. Mr. Greasy Meatball, Mr. Sebastian, take us home. What's your take on this guy putting up some calls and stock here in Autodesk, way to the upside?
Yeah, I actually looked at that and was kind of playing around with structuring a trade off of that. I think that's probably bullish paper. The guy had a price and bought a lot of them, and it threw the whole SKU structure out of whack. I like that. I like Autodesk a lot. So a trade I was kind of looking that
Are you looking verticals here?
Yeah, well, what I was looking at was the 62.5, 70, 75 broken wing fly as a trade. You could put the trade on for about $1.05, and that was because the guy had run the SKU up so much on that upside. I think it's a really interesting trade and warrants some playing around with. I think Autodesk is a name I like, and I think this guy probably has it in his mind that it's going up and up a lot between now and January.
Yeah, it's not a bad way to structure it. We always say here on the show, take advantage of the distortions created by this guy. This guy clearly distorting the upside call SKU here in Jan in Autodesk. So buy verticals, buy that broken wing fly. And if you're worried about the worst come to pass, you add that other wing that Mark was talking about. So you don't just do the vertical. You have the extra leg there, and then you're pretty much all set, and you get to leg into a nice broken wing fly for a much more attractive level than you could otherwise get, courtesy of our friend here gobbling up some upside in Autodesk. All right, that's going to do it for the old odd block today. Now we're going to keep on rolling. Get your hats ready, listeners, because it's time for the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. I know he was away for a while, so all of you are really hungering to sink your teeth into a nice, meaty Express Block. Thankfully, we have the Viceroy here himself, fancy hat on his head and ready to roll, ready to take us behind the scenes into the rock'em sock'em day that was cooking over there on the Options Express by Charles Schwab platform. Alex, we touched on Bob already, we touched on a little bit of crude. What else was cooking? What else was lighting up the tape over there at OX today?
Well, one other name that I think was left for dead a couple weeks ago has had a little bit of trade lift in it, and that's Amazon back up over the 300 level. In fact, Amazon today on OX Social had a number of people supporting it who think it's going to have a terrific Christmas. And let me sort of frame this correctly, though. Social is the community that we have here that traders interact and get to exchange ideas in. And that stock, which, as I said, was left for dead, has folks talking it up and thinking it's going to trade a lot higher, and it's going to be a good Christmas. I will also tell you that in social, there's been a lot of conversation lately about how the decline in oil prices is going to aid the economy going into the Thanksgiving and Christmas season. So there's a lot of traffic and conversation about how everyone expects retail will turn around with this, what I'll call the oil dividend. Much of the country is already seeing gas under $3 a gallon. We don't have it here in Illinois yet. I think we're, this morning when I was driving in, I think I heard the lowest price in Illinois was $3.10 or $3.13, but much of the country is under $3. And it's going to be interesting to see how that dividend filters through the market. I mean, you mentioned earlier that Alibaba now has a bigger market cap than Wal-Mart, but Walmart's got to be very heavily leveraged to the gas price. So that's some of the conversation that was going on here today. As you mentioned, Mark, I was away for a while, and there have been a couple enhancements since I've been gone, and I know I've promoted them on every show wearing my my business development hat, but just a couple points I'll make again. 3 and 4 leg option trades now available on Street Smart Edge. They were available on the OX platform, obviously, but that OX DNA has ported over to Street Smart Edge. And the Idea Hub, which is available on Schwab Mobile, last Monday got the fourth component of the hub, which is premium harvesting. Now, it's a light version, so it's just quantitative credit spreads, quantitative put credit spreads, and call credit spreads. It is available on Schwab Mobile, so if you've got a new iPhone, the big iPhone, I got the iPhone while I was out, and mobile becomes a lot easier on a platform that size. And I know we've talked on previous shows about how big mobile is going to be and how much trading and traffic will be on mobile platforms. The good news is if you're a Schwab customer and you want to see premium harvesting, even if you want to trade on your desktop or want to trade on your laptop, you could do price discovery on the mobile device. When I looked at it just before we came on the air, there were 74 credit spreads showing in mobile. So a very target-rich environment if you are a premium harvester. And that's what's going on over here and at Schwab.
You know, I was just playing around with the social tab while you were talking, Alex. And we talk about a lot of the other tools, talk about the trading patterns, talk about walk limit, all the other cool stuff. You just talked about mobile. All that's very cool. We don't really dive into the social as much as perhaps we should maybe on this show. There's a lot of cool stuff cooking here. I'm looking here at the top of the board here, the general sentiment showing about 75% of the users falling into the bullish category from an overall underlying S&P perspective. So that's perhaps not surprising given what we're seeing in the marketplace, but still a lot of interesting data to parse in here. Maybe as we're going forward, maybe we'll pull a few interesting topics or segments here from the community, people, what they want us to discuss here on the old program, because we love to hear your guys' feedback, your guys' comments, your guys' questions. So we'll keep an eye on the social, and maybe we can find some way to work that into the show more going forward. Meanwhile, it's time to keep on rolling, keep on going forward, right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, welcome to the Strategy Block. This is indeed the portion of the show where Uncle Mike takes off his snow boots, gets off of the snowmobile, and then puts on his smoking jacket, lights a nice roaring fire, puts on the old smoking jacket, but also the bubble pipe, can't forget about that, and the stone tablets, and proceeds to dispense some options, wit, and perhaps, if we're lucky, listeners, a little bit of wisdom as well. Now, my birdies, indeed my minions, working in concert today, have been whispering in my ear all day about what they think is coming down the pike from Uncle Mike for today's strategy block. And we were just talking, Uncle Mike, Mark, and I, about that broken wing fly to the upside. It got us thinking, I think, a little bit, got me at least in the mood for maybe some ratios. So I'm feeling ratios. What do you have for me today, sir, that can quench my appetite for some ratio spreads?
Well, I don't understand why you still have the birdies. I thought you did away with them. I thought you went 100% minions.
I have this bird support program here, and I got some bird seed lying around. I felt bad just jettisoning them. Yeah, it's a whole thing. We'll get into it on another show.
All the birds rights people are going to be after you, I guess. But nonetheless, tell the birds it's duck hunting season out by where I come from. So, but anyway, but yeah, your birdies and minions are absolutely right. We're going to talk about the ratio spread today. A couple ways with which I want to use it for right now. There's two. We're going to just stay vertical for today, but there's a whole nother segment we could do on a horizontal ratio spread as well in combination with stocks. Let's say, for example, that you like XYZ stock, and XYZ stock is currently trading at $55 per share. And you'd love to buy XYZ stock for $50 a share. Now, there's a couple of choices with which you have on that. The first choice, you can just simply put a limit order out there, a good till canceled limit order, to buy it at $50 a share. If it touches $50, you'll get to buy it. If not, nothing will happen. Let's take this to the option trader's viewpoint. What we could do is then sell a $50 put on XYZ stock, front month, front week, 2 months, 4 months, whatever the case may be. And then if the stock does go down to $50, then you'd be happy to buy it anyway, because that was your price anyway, and you'll get paid to buy a stock that you wanted to own at that price anyway. And if it never gets to that level, well, of course, the advantage is that you got paid for waiting, so to speak. Now, there's two ways with which I want to get into the ratio spread today. The first one is using a vertical ratio put spread to get into a stock. And then the second one is combining a ratio call spread with stock, both of which will be vertical today. Now, let's say that you actually think that XYZ stock, I think it's going to go down to 50. And I'm still bullish on it. It's still a good stock fundamentally. There's good things going on with XYZ stock, but this thing's had quite the run up lately, which it may have, like the market in general has over the course of the last couple of weeks. And with XYZ stock doing what it's doing, I think it's going to come down a little bit, but I'd love to play this thing and own it at 50. So let's say that the 55 put is trading for $2 per contract. Once again, I'm just making up numbers as I go just to kind of give you a conceptual idea of how this would work. And the 50 puts are trading at $1 per contract. What you can do is have the ability to ride the stock down from 55 to 50 and yet still buy it at 50. Hear me out on this. The trade with which we're going to talk about today on the put side is we will buy one 55 put. We buy it for $200. Now, this is all done as a spread, so I'm just going to say this one leg at a time, but on the Schwab platform, on the Options Express platform, on pretty much any platform, you can do this all in one order. But step one, like I said, just for sake of illustration today, we're going to do this one step at a time. We buy the 55 put for $2 per contract. Step two, we sell two, not one, but two 50 puts for $1 each, totaling $2. Once again, we're buying one 55 put, selling two 50 puts. Now, the net cost of this trade is break even. It's an even money trade because the two 50 puts with which we sold for $1 each finance the one 55 put that we bought. So, with that being said, how can we make money or lose money on this trade? Well, should the stock be, and let's just assume expiration day risk graph. I understand that you'll be out of this trade and into this trade. You'll be taking action on this trade long before expiration. But for the first part of this, let's assume an expiration day risk graph on this. Should the stock expire at 55 or greater, it's a break-even trade. The 55 put that you bought expires worthless. However, you didn't have to pay anything for it because those 50 puts that you sold financed the whole deal and they also expire worthless. So 55 and above, you actually accomplish absolutely nothing except for a break-even trade. Now let's say that the stock expires between 55 and 50. You'll participate on all of the downside between 55 and 50. So let's say it expires at 52.5, then your 55 put is worth $2.50. The 50 puts then expire worthless. Now, here's where it gets interesting. You're fine owning the stock at $50 per share, and let's say it expires right at $50. That 55 put, you got $5 for riding it down, and those 50 puts expire worthless, let's say. That's the ideal dream spot for this stock, for this trade. However, let's say it goes to like 48 or something like that. Remember, you were fine owning the stock at 50, but that 55 put combined with the 50 put is worth $5, and then the one naked 50 put is you buying the stock at $50. So, moral to the story, folks, you're profitable between 55 and 45 with the peak of the profit being at 50. Anything below 45 is where you're going to start to lose money on it. And you are actually too right, thinking, okay, I think the stock's going to go down. It went down a little bit too much when doing that. So you need to be willing to own the stock at whatever price you're willing to take it on. Typically, when I do a trade like this, a lot of times what I'll do is if the stock goes up, I'll just do nothing and then maybe get out of the trade for break even, and then I'm done after a few days if it doesn't go my way. Once it starts to go down, if it's a stock that I'm fine owning anyway, what I like to do is just sell the 155 put and then buy one, not two, but one of the 50 puts, and then just take a profit on that and then just trade this thing just as if it was a short put at 50, and then recreate my risk management that way. That's typically how I like to do it. But the world is your oyster. Feel free to do whatever you would like on that. Now, another way with which you can use ratio spreads, let's say that I like XYZ stock. It's at 55 right now. And my forecast on XYZ stock is that I think it's going to go from 55 to 60. Normally, I'd like to buy 200 shares of XYZ stock at $55 per share. However, I'm kind of nervous because the market's at pretty close to all-time highs, and there's never been a better time in the history of the entire S&P 500 to sell your stocks to sell the S&P than right now. And let's say that that's factoring into your mind. If that's the case, then one thing with which you could do is you could buy 100 shares of XYZ stock. Let's say you bought the 100 shares of XYZ stock. Well, the good news is that if the market does go down and I'm wrong, I only lose out on half of what I was going to buy anyway. However, if it goes up, I only gain half of what I was going to gain. What's a way with which I can change something like that? Well, allow me to introduce the 1/2 ratio call spread. XYZ stock right now, it's trading at $55 per share, and I buy one 55 call for $2, let's say. So right now, and once again, this is another order you can enter in all at once on pretty much any trading platform worth its salt, but I'm just going to go through it one step at a time for sake of easy explanation. So I'm long XYZ stock at 55, 100 shares. I buy one 55 call for $2 per contract. Now I have double leverage to the upside. So if the stock goes to 100, then I can benefit from the stock going up as well as the long call. However, the bad news is that I have time decay working against me on that call option. And being the degenerate premium seller with which I am, except when I'm buying premium, that is, I don't like time decay working against me. So in this case, what I'm going to do is sell two 60 calls for $1 each, not one, but two. Now you might be saying, but Mike, doesn't that make you naked? You're long the stock and you sell two calls, doesn't that make you naked? Not at all. The reason it does not make me naked is because one of those short 60 calls is going to be covered by the stock, the 100 shares of stock, creating a covered call. And the second one with which I sold is going to be matched with the 55 call that I bought. Now, I know that I'm making this extremely simple at this point. That's the whole goal of this. It doesn't always work out this easy. But with that, we're going to sell the 60 calls for $1 each, coming out to $2. That $2 finances the 55 call that we bought. So if the stock stays the same or goes down, it's the exact same thing as having a half position on the stock. Should the stock be between 55 and 60, we get double leverage. And the way with which we get double leverage is that we have the long stock and we have the call option working in our favor. Now, the disadvantage to this trade is that anything above 60, you get nothing. So you have to kind of come to grips with, if the stock does go significantly above 60, you're not going to be able to participate on this trade. You may want to consider an alternate strategy. So the way with which I like to use this strategy, some people use it as a stock repair strategy. If the stock's going against you and you don't want to buy more shares of it on the way down, maybe put on a 1/2 ratio. I've done that before, but I typically try not to. What I like to do with this strategy is if I'm looking to buy a new stock or a new position of some sort, I'll take on a half a position with the underlying, put on this 1/2 ratio spread, so that way if I'm wrong about it, I'm only wrong on a half position, but if I'm right, it's going to be a position with which, well, I don't really see it going much past 60 anyway. So I'm fine putting on this ratio spread and taking on the risk this way. Typically, when it goes to around in this instance, maybe the 58 or 59 level, I'd probably get out of one of the 60 calls and then the 155 call, and then just manage the risk like a covered call. That way, it just keeps things simpler. And then if it goes down again, I can get into the spread again. And I can, as a good friend of mine would say, I can do stuff. If you are a frustrated covered call trader because you get called out all the time and you view that as a bad thing, when actually it's a good thing, plan on being frustrated with this strategy too, because if the stock does go up too high too fast, you will be frustrated. I can tell you that for sure. For any questions on this, feel free to give me a call at the phone number I will reveal at the end of the show, and I'll be happy to discuss this further. And that is the strategy block for today, November 3rd.
All right, thank you for that, Uncle Mike. Detailed and thorough, as always. And now we're going to keep on rolling right on into our final segment. It's time to break open the Around the Block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, and welcome to Around the Block. This is indeed the portion of the program where we break down all of the interesting stuff that is cooking for the week to come, all the things that we're keeping an eye on. As we mentioned at the top of the show, a lot of things coming down the pike. From an overall options perspective, we got some interesting. We mentioned Baba at the top of the show. Baba is reporting before the bell tomorrow, so hopefully if you wanted to put something on, you already did it, because from an options perspective, you're pretty much out of luck at this point. It's a wait-and-see thing at this point. Also, tomorrow, one of our favorites, one of our perennial all-stars here that we watch a lot is Activision. I know if Andrew was here, he'd be very big on that one. That one was a very popular risk reversal play for a long time, trading a little bit outside that range now, so interesting to watch that one. Of course, Disney coming up later this week on the 6th. Priceline tomorrow as well on the 4th before the open. So hopefully, again, same thing as Baba. Hopefully you put on your trades already, because that ship has sailed. And then coming up in a couple of days after the close, the big one, the big behemoth Tesla after the close on the 5th. So we'll be paying attention to that one, of course, and see how that one performs as well. A lot of eyes, and I'm sure a lot of OX clients paying attention to Tesla. Speaking of OX clients, maybe we'll start with you, Mr. Viceroy. What are you watching for the rest of this week, sir?
Well, I think you recapped a great deal of what to look at, but non-farm on Friday. But it'll be interesting to see how the election pans out tomorrow. And, you know, the first rule is never discuss politics or religion. But it'll be interesting to see if there's a change of leadership in the House and the Senate. I think the expectation is won't be a change of leadership in the House, but there might be in the Senate. It will be interesting to see how the market reacts to that on Wednesday. And I think that'll both be a play in the VIX, a play in the Spider, and probably a big play in the 10-year. But that's what we're looking at near term.
And Uncle Mike, take us home. You were mentioning some of the things you're watching throughout the rest of this week, including non-farms, of course, at the end of the week, in addition to a lot of these different earnings. What in particular is catching your eye this week, sir?
Just to reiterate everything with which we had said already, and the one other thing that I'm watching is to see if we can establish more new highs on the S&P. Today we closed, I'm just looking at SPX at the 2017 level. We were above the 2020 level, and then as Mark pointed out earlier on the show, when the sell-off happened in oil, the markets went down. So curious to see how the election day runs things. It's one of my favorite times of the year to watch futures is on election night. I like to curl up by the fire and watch the streaming quotes see what the E-mini's doing.
That's true. We have one of the most unpredictable events of the market. That is indeed elections coming up this week here in the domestic U.S., of course, listeners. A big political event, and that always adds a little bit of wait-and-see mentality, a little bit of concern into the marketplace as well. So we'll, of course, be watching how that plays out tomorrow as well. Mr. Sebastian, now you can take us home, sir. What are you watching for the rest of this week?
I think oil it's amazing watching the commodities lead the stock market right now. And it's producing some things that are interesting. I think you're seeing a lot of the big leaders, the oil services, Halliburton, 50, and you're getting, might threaten $50. I think that's going to be a really interesting thing to watch. I think the fact that we touched all-time highs and the VIX didn't even breathe on 14 really shows that the market is much more nervous than it was only 3 months ago. I think we have, as you know, Jared and I have talked about a couple times. I think we're in a new vol regime. I don't think we're heading toward a 50 VIX, but I think looking at 14 as the low should be kind of where people see as a low VIX going forward. And we may see a little bit of a bull run into the year end, but we might see a 2007 type year end with vol up and the market up aggressively simultaneously. That could really be what happens. And non-farms could be interesting, but watch that VIX contract trade.
All right, good stuff, Mr. Meatball, and that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, let's check in with each of our cohorts here on the old All-Star panel, see what they have cooking that may interest you. Let's start off with you. Let's go back in reverse order, starting off with the Greasy Meatball. What webinars, what interesting events do you have coming down the pike over there in the land of the pit?
Saturday the 8th, we are doing a webinar on using options to trade directionally. It is $77 for a good 3 hours of me and Andrew. It's a great way to spend a Saturday, and you will not be disappointed with what we pull out with that $77. I mean, what else are you going to do with $77 other than gamble it away on some college football game? Mike?
That's money well spent, sir. All right. And Uncle Mike Tosaw, what's coming down the pike in the land of RCM?
Well, if anyone is interested in doing any of the ratio spreads or anything with which we discussed in the strategy block, feel free to give me a call. This is stuff that I do very frequently, 312-212-3531, or send me an email at mtosaw@rcmam.com.
Good stuff, sir. Listeners, if you haven't taken advantage of that yet, I know a lot of you have. You should run, not walk, to check that out. You can put a small amount of capital to work and have Uncle Mike do some stuff for you, which is a nice thing and probably a lot more than your typical financial advisor you're going to get at some large wirehouse. You're going to walk in and they're going to plug you into some spreadsheet and say, okay, 60, 30, 10, next. Give you my 2% and I'll get the heck out of here. Uncle Mike's going to do a little bit more than that. So if you're interested in a lot of the things we talk about on this show, including what he has talked about today, doing ratios and 1x2s and all that fun stuff, give him a call. Check it out. I think you're going to like it over there. And last, but certainly not least, Mr. Viceroy, what's coming on the pike in the land of OX education and live events?
3 live events. Detroit this Saturday, November 8th. That's Jimmy Ruzan's all-day program. It actually runs like from 9 till about 2. Raleigh, November 15th. Houston, November 22nd. And I'll tease there's going to be a Boca event after Thanksgiving. I don't know that we have a firm date yet. A couple webinars Wednesday this week, the 5th. Marty Kearney from the SIBO is going to do a webinar he has that's entitled The Thanksgiving Christmas Super Bowl Strategy. Interesting. I've seen some of the stuff behind this, worth coming out to listen to. And then Thursday, Dan Gramza from the CME is going to do incorporating relative strength indicators into futures trading. Dan is an old friend and a really talented guy. Great seminar, worth a listen. And that's what's coming up over the next couple days.
All right. Thank you for that, Alex. And on behalf of the Viceroy and Uncle Mike and the Greasy Meatball and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program. And surf on over to OX, kick the tires over there if you got some time, and then give Uncle Mike a call, and then check out one of the Option Pit webinars. And when you're done with all that, of course, surf on over to the mothership, theoptionsinsider.com. A lot of great content awaiting you there, in addition to all the fun radio we put out on a daily basis. And of course, we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.